Good morning, traders. This is Chris Buss with your Daily Profit Compass for Monday, September 28th. Okay, we've got a big risk-on morning ahead of us. I've got a few notes here. S&P futures are up about 1.3%. NASDAQ futures are up 1.65%. And small cap futures are up around 1.4%, with gold and oil flat. So I have SPY set to open at around 333, right in the middle of these two objective levels that we've had identified, which is 330 and 336 on the 2-hour chart. The most important thing for any of you that carried short-term weekend risk that went home long on Friday, the first thing you got to decide, and you should probably decide that kind of going in, how you want to handle it, is do you want to take quick profits and then reset when price either gets up to 336 or comes back to 330 for a long here, or potential long or short at 336, or you want to hold your position and obviously hope that it goes up rather than backfilling this big gap from Friday. So have a plan put together on any weekend risk that you had on, so you don't get surprised, when the bell opens. For those that are not in and are going to be actively trading this, let the open be what it is and just sit tight and wait for an objective location to enter. And from this chart, I think it's either 330 or 336. We're going to jump over to the 30-minute chart in just a second. For those on a longer time frame, on the daily time frame, despite the positive open, we are still on a sell signal. So you're going to have to decide how you want to handle duration trades. If you think, oh, well, this was the bottom and now we're going to new highs, you can anchor, your positions against 330 or 336, or even wait for 341 to be taken out before doing so. But I would have in your mind kind of how much exposure you want, where your stops are, etc. Because if things get going quickly, you don't want to be kind of sitting there not sure what you want to do. For me, I want to see this trading range taken out, which is a break above 341.50 right here. I'm happy to be tactical within the range, but once if we were to break above 341.50, we've got a $11 trading range here. So a breakout would imply an $11 move higher, and that puts us at 352. I want and close to all-time highs near 358. So for me, a break above 341.50 gets me interested to get long for a move up to, at a minimum, $11 higher, and probably a run to back up to the old highs if that happens. But within here, I'm not willing to do that. I want to see some of these intermediate resistance levels go. Now I might be long, or I will be long on a break above 336, looking for a move $4 or $5 higher, but that's all tactical stuff. That's short-term active trading. That's not, piling into individual names all over the place and getting gonzo bullish. So that's how I'm going to handle this trading range. Now let's drill down to the 30-minute chart. If we're set to open around 333, there's an intermediate level here on the 30-minute chart around 332 that you could stay long against, or actually even short if that level fails and they backfill the gap. There's a good $3 there to be captured if you're nimble. So, but if it holds, then you've got that run up to 336 that we just talked about, and I doubt it's going to happen today, but then up to 341. Moving on to the Qs, I have that set to open around 276, which is right in here, above this 275 level that had been important in this trading range. I think if you're long, you can stay long against that level, but anything below that, the gap is going to fill down here to 272. But the upside target is this 280 level. And if price were to take out 280, then it's got a free path. Let's see, that's a $12 range. You've got a shot at 292 just on a measured move basis. So, like SPY, for a more strategic duration trade, I want to get long against 280 if we get a breakout there. But within the range, still being tactical, willing to take a short if price were to be rejected here at 280 for any reason. I think that's an objective level. Resistance is resistance until broken. So 280, 275, and 268 are your key levels on QQQ. We will see those levels emerge here on the 30-minute time frame. Nice double bottom, that W pattern with bullish divergence on the indicators. That's a good pattern recognition to try and, commit to memory when you see that W setup with bullish divergence to go along with it. That usually ends up with a positive move, and the trigger is a break above this neckline, and we will have done that this morning with the gap up above. I've measured the width of this pattern at 4.3%, and that projects out to 284 on a measured move basis. So that's what the bulls will be shooting for on this technical setup. And on these lower time frames, again, 275 and 280 are going to be key. If price were to drop back below 268, or even really back below this 273 level, you don't want to see price come back into the range, or else the target, as we've discussed many times, is back to the bottom of the range. We'll just see what has to happen in the, as the day unfolds. IWM, I have that set to open at 148, right here in the middle of the range. Your objective locations are 149.50 and 147. If price were to break below 147, it's going to come back to 145. If price can break above 149.50, then it's into this $3 gap, which would be a nice trade to capture should it go there. Here's the 30-minute chart that drills down on that. I didn't extend the gap, but it goes over here as well. I'll make that change. So there's not really a trade to make, I don't think, off the open unless you're really sharp and nimble. I'd wait for 147.50 or 149.50, a more objective place to try and anchor a long or a short, depending on what price does. But be careful in the middle of the range. It can go obviously either way, and you don't really have a firm line to shoot against. Quickly through the FATMAAN names, starting with Facebook, set to open right below resistance at 260, which is a nice place because that's an objective level from before. So a break above 260, you can get long with a stop just below and look for a $3 move where there is some decent resistance. So be careful if you get up to 263. It may stall there in reverse, but below 260, if they fade it, you're going to get that gap fill back to 255. So 260 and 255 and 263 are your immediate levels of interest this morning. Apple, I have it set to open at 115 right here. A break above 118 targets 123. A break below 113 would target 109. At 115 here, tough to take a trade directly in the middle of the range. I think if you're not in already, you got to wait for either a back touch or a gap fill lower to get long, or on a move above 118. Be careful about trading in the middle of ranges. Amazon, just like the other ones, set to open here at 31.50 at this key level that we've had on the board forever. Break above, targets a move $50 higher. A rejection targets either a gap fill or a move back $50 lower. These $50 increments have been working like a charm, so lean on them on breaks above or below the pivot level. And in this case, it's 31.50. So it's going to open right at resistance, which is a nice spot if you're an active trader. Microsoft, 211 I have as the near opening price, which is right here off of this prior level. You could use that level as your pivot point. Above, looking for 213, then 221. Below, looking for a gap fill back to 208, and if that were to break, 205. So pretty clean levels there to shoot against for active traders. Got momentum rising and RSI rising. That looks good and that looks bullish. Netflix, 490. right here. We've had these levels keyed in and been trading against them the whole time, and they've been working pretty well. 495, 505, and 485 are your objective levels to work here in the morning session. A break above 495, get long and look for 505. If price makes a move up to 495 and it looks like it has, trouble, and the market seems to be stalling as a whole, you could short it right there and look for a back gap fill back to 485. So there'd be $10 to play with there on a down move after the open. So 495 is your pivot. Above, look for 505. Below, look for 485. Google, haven't been paying as close attention to this one as the others. Set to open around just below 1460. So that's your pivot. If that were to complete, you've also got a double bottom look here, which would project, roughly speaking, a move up to 1505. But first things first, a break above 1460 targets 1490 and then 1510. If it can't break through, look for a gap backfill and a move back to 1440. I wasn't able to get a good pre-market read on Tesla for some reason, but I think it's going to open above this prior gap. So you can use 420 as your short-term pivot. As long as that holds, you can look for 450 as a first target. But if 420 fails, it's going to fill this gap and come back to the 405 range where it closed on Friday. So get your ducks in a row pre-market, especially if you carried risk over the weekend. Decide if you're going to close it out for quick profits or you're going to manage the trade from here. Either one is fine. 100% personal preference and how you want to trade it. Keep in mind that we're going to have a big opening gap that might just be too juicy for traders not to try and fill, to take care of that unfinished business, then head back higher. So be prepared for that scenario. But seems like a risk on day. We'll have to see how it goes and unfolds from here. Of course, anything can happen. Stay fluid and flexible. Be a leaf on the stream. Be happy to go higher or lower with no biases, no ego. I think if you keep that fluid mentality, especially in this environment of elevated vol, number one, you'll keep your sanity a lot better and you'll make a lot more money if you're willing to go the other way when you see price make a move or give you a signal, because volatility is expanding, it's not contracting. So these 1%, 2% days are coming more often, more frequently. And if you're a short-term trader, you already know how much money you can make or lose in a short period of time if you're flexible, and how fast it can disappear if you're stubborn and stick to a thesis that's wrong. So Stay open today. Stay flexible. I hope you like the content. Please hit the like button and certainly subscribe if you're new to the channel. Hop over to the show notes where you can find links to my blog and content where you can get all this information directly mailed to you each and every day and intraday when I see happenings in the market that I want to pass along. So this has been Chris Buss with Traders Profit Compass. Hope you have a great trading day and talk to you next time.